Hello guys, welcome to my channel. In this video, I want us to briefly look at what uh, gold is doing. So we'll be analyzing gold from higher time frame to probably 1 hour time frame. So let's dive into it. So as you all know, we have a pattern we follow, and the pattern remains the same. So as I used to say, there is no one way to this thing. So just follow your perspective and be consistent with it. So, if we were to look backward, you can see that gold has been seriously in uptrend, and it has been kind of difficult to catch using the same pattern. But that doesn't mean that we will not wait patiently and wait for the markets to give us our own share of the move. So, as you can see, if we were to start marking from the back like this, as you can see, this is the obvious break of structure. I can't say break of structure is not obvious break of structure because this doesn't really take out inducement, because there's no inducement in this move. So what market did was to just respond to other flow, and it's also valid. Sometimes market respond to other flow, it doesn't need inducement. Sometimes market just sweep liquidity and move. That's what is important. Not your POI, not your fair value gap. What is important is the liquidity. So once market is done with liquidity, then anything can push the market to the continual direction. So, and as you can see, markets keep going. The first inducement that the market created was this, and market push up, create another valid pullback, as you can see, created another valid pullback here, then push up, come back, another valid pullback. You see that all this move market is not taking based on daily time frame. This can also be a setup in 4 hours, 1 hour, 15 minutes, any other time frame. But based on daily time frame, you can see market keep pushing up and keep pushing up. All this push, we consider them as an inducement. So, and you can see this was the last place that the market, this was the last place that the market actually creates obvious and valid pullback. And at the end of the day, market decides to come back and take uh, the inducement based on daily time frame. So we can say this is going to be our low, because this can't be our low. This is going to be our low, sorry, because this was the last value structure that the market created, this level. Why? Because this inducement was taken out. Market actually take out this inducement. So a market move aggressively. So we can say this is going to be our low. So although it's wide, but that's what uh, that's what it is. We can't just force things to happen in the market. So we'll be looking at this, and the market keep pushing up. So so then when market come down here and take down this inducement, we are expecting markets to to do two things: sweep the inducement and push up, or mitigate POI. And as you can see, market actually mitigates our decisional POI, the POI that rests below the inducement. And if we are to look at it, maybe this will be our extreme POI. So, but unfortunately, market responded to our decisional POI. So, and um, we had a break of structure. We make this move to be valid in daily time frame, and then this low serve as our low until market do otherwise, either create another structure at the upside or market sweep it. So, and we had a break of structure here. So let's check, maybe this is a valid pullback. No, as I'm seeing, this is not a valid pullback. This level is not a valid pullback. So no structure there. Sorry, market just came back and do its things and push back. So this will serve as our first pullback that the market did, and market was going to do another pullback, then another pullback here. So, and as you can see, it took time, but market still come back for its thing because you need those liquidity, this level, you need this liquidity as a fuel to continue the movement. So, and as you can see, liquidity grab. And what are we going to look out for next? We look out for the other block rest below the liquidity. And as you can see, that's exactly what market is responding to. The same way it responded here. But we are still not going to. We look for our extreme and mark it down. And this is supposed to be our extreme, but mitigated, and this is the only thing I can see here. So this is the refined order block that I can see here. So we are waiting for this, and anything below here we mark as our change of character. So now, once market mitigate this level, what are we supposed to do? We go to 1 hour or 4 hours, depending on the structure that is clear enough to support this movement to the upside. And remember, this is going to be our daily break of structure. This level, this is going to be our daily break of structure. So, but immediately market mitigate this level, what are we supposed to do? We are supposed to come to our lower time frame and start looking for structure that supports this other block to the other side, to the break of structure, the daily break of structure. So, because this other block is a sign that market can reverse here and continue to break the structure. And if this fail, then we will reposition here and wait for the same thing. So, first thing from my experience, first thing I used to look out for is, for example, this. For example, when market mitigates your higher time frame, which is daily POI, things can happen. You can get the direction correct, but at the end of the day, you will still not be able to enter the market. Let's say you have a setup like this. Let's say this is the daily setup, and then market come to your extreme daily POI or whichever POI it is, either decisional or extreme. Things can still go wrong here because if you switch to 1 hour, market might choose not to respond to your 1 hour structure. Market can decide to be responding to 4 hours. So this structure can be happening in 1 hour because in 1 hour we are expected to buy here, buy here, buy here until market break this structure to support the movement to the other side. So, but you also have to understand that the time frame, you can't decide which time frame the market want to use. So that's why I said you go to lower time frame. You can use 4 hours, 1 hour, but you have to be obvious. The structure that is obvious that the market is creating. I would suggest that you wait for the first structure to be created, then you go to 1 hour and see whether market actually responded to that 1 hour structure or market responded to 4 hour structure. And the craziest thing is market can also still be using daily structure, which we call daily internal structure, to move towards to this direction. So once you understand, okay, which structure is market using, 1 hour, 4 hours, or daily, then you'll be able to know which one is high probability. Because if you're using 1 hour here and market is following 4 hours, you will be stopped out. You might have one win, but more loss. Few wins, more loss. But if you are also using 4 hours and market is responding to daily internal structure, you might have few wins, more loss. But if you are accurate, or let's say most of the time market responded to 4 hours and this level is like 4 hour structure, this move, then you just need to position here, position here, position here, and the process will continue. So even if you are going to have a loss here, it's just going to be maybe one or two, and you can have maybe three, four wins here. So that's the bonus. So for me, I used to look at which structure that the market is obviously following, that the first structure that the market created. Let's look at it together. So when market mitigates your higher time frame POI, the last pullback we serve as what? As change of character, not inducement, change of character, because we are trying to change this selling movement behavior to the up behavior, because market is trying to mitigate the higher time frame, and the behavior that gets to this level will be changed to this level, to the up upside. So where is our last pullback that the market did? You can see, let's say market is coming from here. We are just going to identify the pullback that the market is doing. Okay, this is not a valid pullback. So this is the last pullback that the market did, and break down, do another last valid pullback. So as we are tracing it, you can see this is a push down, this is not valid, this is not no valid pullback here. If you're still confused, you can watch my video. So this level in 1 hour time frame, we can use it as change of character. So this level will serve as our change of character. Sorry, my network seems to be okay. Sorry, my network is. Let me reconnect this network. Sorry, okay. So, um, sorry for the break in communication, or what are we going to call it? So, so I think we can still go. The network will connect. I'm still seeing it. Should be able to come up. So we had change of character here, and then what are we supposed to look out for next? Hold on, please. Okay, my network is up. So what are we supposed to look out for if this is a change of character for us? If this is a change of character for us, what are we supposed to look out for? First of all, we're supposed to look for our inducements in 1 hour. Remember, this is 1 hour time frame. So this is the last pullback that the market did in 1 hour after market broke this structure. This is the last pullback the market did after market broke this structure. And then what are we supposed to look out for? Come to our extreme. First thing is to look for POIs that the market that rest below this level. And then the extreme, we need to look at for extreme. This is the other block, but there's no valid fair value gap. So this is the only other block that we can use. So, and you can see market responded to this 1 hour time frame, failed the decisional POI, and market broke, gave us break of structure. So you can see that we had break of structure here. So knowing that market has created break of structure here, it shows is a sign to me that okay, maybe market will protect this low and will continue the bullish momentum. But what are we supposed to look for immediately after the market break this structure? Just look at the last pullback that the market did. This seems to be the last obvious pullback that the market did. If you can trace it, you can see something like this. These are internal. Then you see this is the last major pullback that the market did. So, and what are we supposed to look out for immediately? The other block that is resting below. This is a valid other block that was resting below. Then where is our extreme? This will serve as our extreme other block. So if market come here, fine. But as you can see, market refused to come here, then come to break the structure. So remember I said market do not promise you your other block or whichever POIs. What market needs is just liquidity. And once market is able to grab the liquidity, then market will do its thing. So we are just positioning here based on probability, not based on certainty. It doesn't mean that the market, you mark your POIs, you do your analysis, and market will respond to your no, it doesn't work that way. It's all based on probability. This is a game of probability, not a game of certainty. So when you mark your you mark your structure or you do your analysis and market refuse to respect your analysis, it's nothing to worry about. Your job is to reposition and do the same thing again. So as you can see, anything below here will give us change of character. So currently, what are we looking for in 1 hour? You can see that if we are to look for 1 hour inducement, this seems to be last pullback that the market did, which is valid. So last pullback valid, then this is the other block resting below it. 1 hour other block resting below it. And this is the other block that is holding the market. It's either it fails or it holds the market and give us another break of structure to the upside. So, but whichever way, you have to pay attention and see. Once this level fail, there is tendency that the market will move to the extreme. And where is the extreme? This is the extreme, this is the extreme. I'm seeing the extreme here based on other block. But based on um, other flow, I can say, okay, this mitigated, this other flow has been mitigated, then this is the only other flow. So we can use the whole this space because it's not that big. So we can be waiting for here. The refine purpose, for refine purpose, this is the other block. So both are valid. So but this zone you can be waiting for your buying continuation. So this is the until the market break this structure, daily structure. So this is the uh, good analysis, and let's check 4 hours and see maybe market is even respecting 4 hours more better, and the higher the time frame, the smaller the candle becomes and the clearer the structure becomes. So that's why i I advise sometimes, and let's see this one that failed, let's see which structure, which time frame is the market following. So we had a structure here confirmed because this pullback, this inducement mitigation, this is not the market response to this. Let's mark 4 hours and see what the 4 hours is doing. So I think 4 hours, market responded to 4 hours in the first structure. The market broke up, which is fine. So we had a break of structure. This inducement remained the same. And this is 1 hour POI. Then let's check which one is 4 hours. Then this is 4 hours POI, and you can see that 4 hours POI market respected it correctly instead of the other one that the market did it. So for me now, 4 hours is also valid, 1 hour is also valid, but market is strongly responding to 4 hours because in this level now, this there's no POI in 4 hours, so that's why this level failed, and this is the only POI that market responded to. So this is a strong POI, and you can see push the market to the upside. So if you were to look at it again, you can see in 4 hours, this is not valid order block. This is not valid pullback according to this time frame and broker. This is a valid pullback that the market did. So in 4 hours, this other block is also valid. This other block is also valid because it's the last other block. Let me check. Okay, this is the last selling momentum. So all this is the 4 hour zone that we are to wait for. So in this scenario now, what you need to do is to wait. Once this level fails, you can trade to this level. And once market mitigate this level, know that continuation is possible. So if we go to 24 hours, which is daily, if we go to daily, sorry, 24H, this video is becoming too long. If we go to daily, what you can pay attention to is if this decisional POIs in daily want to fail, it's likely for markets to do what? To use this other block, this buy momentum, to sell this market to the downside, and this will happen. So you have to position, prepare, expect anything to happen in this market. So I don't want this market to be complicated, this analysis to be too long. It's already 20 minutes. So um this is my current situation for gold. Let me use 1H. If you are using 1H, you can wait for this level to be invalidated. Once this level is invalidated like this, once this level, because demand is here, and once this demand fail like this, wait for pullback. You can try to sell here to this level. So that's exactly what I will be looking out for in gold. Remember, it's all about probability. Nothing is 100%. So you apply proper risk management. But this is my outlook for gold. So thanks for watching this video. Bye.